Michael Burry bought put options on 1 million shares of NVIDIA and 5 million shares of Palantir.
So some new indications of potential AI bubble. Interesting post coming here from Michael Burry of Big Short fame.
In 2005, while Wall Street celebrated record profits, one man quietly discovered that America was sitting on a financial time bomb. His name was Michael Burry, a former medical doctor turned investor who didn't act like anyone else in finance. He didn't network. He didn't party. He didn't chase headlines. He spent hours alone, reading financial filings like a scientist studying a virus. And that strange habit led him to uncover one of the biggest lies in American economic history. While everyone believed the housing market was unstoppable, Burry went deeper. He dug through thousands of subprime mortgage documents, not summaries, but the raw data, loan types, income levels, credit histories, interest resets. And the deeper he looked, the more horrifying the picture became. Families making $30,000 a year approved for $500,000 homes. Borrowers with zero proof of income getting massive loans. Banks packaging toxic debt, stamping it AAA, and selling it to pension funds. Burry realized something no major bank, no respected economist, and no TV analyst wanted to admit. The American housing market wasn't just risky, it was engineered to collapse. So he made a decision that would make him famous and hated. He went to Wall Street's biggest banks and asked to buy credit default swaps, financial weapons that would pay him if the housing market crashed. Bankers laughed. To them, Burry looked like a clueless outsider wasting his funds' money. But he wasn't guessing. He was reading the truth hidden inside the numbers when the 2008 crisis finally hit, and the financial system crumbled. Burry made $700 million for his investors and earned $100 million himself. He became the real-life inspiration for The Big Short. The man who predicted the crash because he dared to look where no one else bothered. But the most important part of his story isn't the money he made. It's the lesson. When the world is blinded by excitement, the truth hides in the details no one wants to read. After predicting the 2008 crash, Michael Burry didn't become a Wall Street hero. He became a threat. Most people think that after making $700 million for his investors, Burry was celebrated. But the truth is far darker. He was criticized, attacked, and even accused of causing panic. Banks blamed him, analysts mocked him, investors pulled money from his fund because they couldn't understand why he bet against the entire financial system. But this moment shaped the Michael Burry we know today, a man who trusts data and trusts nobody else. After the collapse of 2008, Burry didn't chase fame. He shut down interviews. He rejected publicity. He closed Scion Capital and disappeared from the financial spotlight for years. Why? Because he learned the most brutal lesson of his career. People don't want the truth. They want comfort. And Burry was never interested in comfort. Behind closed doors, he kept studying markets the same way he had before the crash, by reading every line of financial statements, digging into footnotes, and looking for the hidden risks nobody else wanted to see. He wasn't influenced by trends. He didn't care about hype. He ignored headlines and trusted only the numbers. This is when Burry discovered his true identity as an investor, not a gambler, not a trader, but a forensic analyst of financial reality, someone who could spot danger years before it hit the front page. In the following decade, he made bold and unusual investments. He warned about excessive government spending. He criticized the Federal Reserve for printing money too easily. He positioned himself against bubbles in tech, crypto, and even the bond market, long before these warnings became mainstream discussions. And while people online joked about his deleted tweets, they forgot something crucial. Every time Burry sends a warning, it's because he sees the same patterns he saw before the 2008 collapse. Data everyone else refuses to look at. He wasn't trying to be dramatic. He wasn't trying to go viral. He was simply doing what he always does, reading the numbers nobody else reads. Whether you agree with him or not, you can't deny this. Michael Burry is one of the few investors alive who has nothing to gain from being popular. and everything to gain from being right. After becoming the only man who predicted the 2008 crash, Michael Burry shocked everyone again. He said the next big investment wasn't gold, it was water. People thought he had lost his mind. Why would a legendary investor focus on something as basic as water? But Burry wasn't chasing hype. He was following human behavior. He believed that in a growing world, the real power would belong to whoever controlled agriculture, irrigation, and food production. So he invested in farmland, water systems, and companies tied to global food demand. And water wasn't the only place where Burry went against the entire market. Throughout the 2010s and 2020s, he warned that tech stocks were becoming dangerous, inflation was underestimated, and investors were addicted to cheap money. Every time he raised a red flag, people said he was being dramatic, just like they did before 2008. But Burry wasn't guessing. He was reading data the same way he always had, line by line, footnote by footnote, ignoring the noise that blinded everyone else. What makes him unique isn't his predictions. It's that he never speaks unless the numbers tell him something everyone else refuses to see. Whether it's water, inflation, or tech bubbles, Burry's philosophy stays the same. When people feel invincible, that's when the real danger starts. The man who predicted the 2008 crash is now risking billions against the hottest tech trend in history, artificial intelligence. While the world worships AI, Michael Burry is doing what he's always done, seeing what others refuse to see. He placed massive put options against two of the most celebrated AI companies, Palantir, PLTR, about $912 million in puts NVIDIA, NVDA, about $187 million in puts. Combined, the notional value exceeds $1.1 billion, making this one of the boldest contrarian bets in modern finance. Why would the man who correctly foresaw the housing crash bet against companies everyone else calls untouchable? Because he studies the numbers no one else reads. Burry says AI companies are inflating profits by spreading enormous hardware costs, servers, chips, data centers, over many years. In his eyes, this hides the real risk and paints a misleading picture of profitability. He isn't claiming AI will fail. He's saying the math doesn't support the hype, and the same human patterns that caused the 2008 crash could be at work again. Greed, overconfidence, and a blind rush into excitement. People ignored him before, laughed at him before, and sometimes even hated him. But Burry doesn't seek applause. He seeks accuracy. And history proves that when he acts, the market should pay attention. This bet is more than money. It's a statement about valuation, human behavior, and the dangers of speculation. Burry is proving again that being right is more important than being popular, a mindset that has defined his entire career. Do you think Burry's bet against NVIDIA and Palantir will succeed? Or is this the first time he's wrong? If you enjoyed this story, make sure to like, comment, and share this video, and subscribe for more insane financial scandals that change the world.